Good morning, everyone. Welcome to the Daily Trader with Kevin Hincks. I'll be taking you through the next 10 minutes or so. We're going to look at our macro minute, and then we're going to look at two paper money trades. Today, economic data has the markets feeling good on what normally would be a dry powder day ahead of a bunch of earnings coming out. You got Google Alphabet after the bell. You got AMD after the bell. We'll get to why those are important in a moment. But first, JOLTS data just coming out here at 9 o'clock Chicago time. 7.443 million job openings and labor turnover survey is what the JOLTS is. And it was the lowest reading since early 2021. Layoffs are what's starting to pick up here in corporate America, something to watch for there. And then consumer confidence, a big jump in consumer confidence up to 108.7, down or up from 98.7 last month. There were expectations for 99.1, comes in 108. So a really strong consumer confidence number. Now, what does that mean? That means that the dollar is higher. It means that the 10-year yield is now over 4.3%. Crude oil is up small today. VIX was up to start the day. Now it's on the downside. Gold up $26. So the risk-off assets are getting kind of interesting here as we get into this chapter of earnings season, which is large cap, mega cap tech stocks that are coming out starting today. Now, we're going to look at Meta Platforms. And Meta Platforms is probably one of the more clean beneficiaries of AI. And so they have used AI to its highest form. It's called the Llama AI model. It's basically moving this company to another level, and you can see it in the price of the stock. We'll get into the price of the stock in a moment, but it enhances their advertising. Why? Because it helps advertisers target and be more targeted with their customers that they're trying to reach. It also enhances the social media platforms by helping out. So AI and its injection into business, probably one of the stronger companies to use AI is Meta Platforms. Digital advertising, which is about 95% of how they make their money. Strong U.S. economy, strong digital advertising. We'll learn more from that today when Google Alphabet comes out. So how about this? Grandview Research put out a note that said the digital ad market, which means advertising off linear TV into the digital media, is expected to grow compound annual growth rate of 15.5% through 2030. If Meta Platforms makes most of their money off digital advertising, and that is expected to explode between now and the end of the decade, Meta Platforms will be a beneficiary of that. Now, it's not just clear sailing, though, because Meta Platforms has a lot of things going on. The glasses, the metaverse, all these new technologies that they're spending lots of CapEx on have to start to be monetized, and they have to start to be adapted. So those are some of the risks. The digital advertising will probably be there. Facebook, Instagram, WhatsApp, those will be strong, but some of the places they're spending their money on. And remember, the stock will react negatively if the CapEx is too big and Mark Zuckerberg is not continuing his year of efficiency. Look at the expected move in Meta Platforms on the Thinkorswim platform. Look at the chart on the screen there, how far this stock has come. Here's the numbers. 12 months, up 92%. Last 6 months, up 32%. Last 3 months, up 17%. This stock has gone straight from bottom left to top right. So even though they have everything going for them, it doesn't necessarily mean the stock is going straight up, especially on an earnings event. This is one very high bar for earnings. So therefore, this trade we looked at was, again, a $41 expected move on the downside. That would take you down to about $540, right around that strike. So the trade we're looking at here, the paper money trade, is to go in and sell the 530 put and buy the 520 put. So we're selling a $10 put vertical. Why? because implied volatility is elevated. You can still be wrong on this trade in terms of direction and still be profitable. And of course, you're collecting theta on this trade. So the max profit you can make is whatever credit you sell this spread for. This gives you a chance for the earnings to come in, maybe a slightly average to negative reaction. But if the stock were to rally on good earnings and strong earnings that are expected, you're short a put vertical. It goes to zero. It expires November 1st. It would go to a pretty low level pretty quickly. So short put vertical, taking advantage of the elevated implied volatility in Meta platforms and their earnings coming out tomorrow after the bell. This is the idea here is to give you a strategy to look at. And then you pick the strikes. You pick the overall trade-offs that we talk about in this trade. Okay, let's get to our second one today because it's kind of interesting, and that is Nvidia. Why is Nvidia important on a day where AMD is coming out and Google Alphabet is coming out with earnings? Why are we looking at Nvidia? Well, because in this mega cap earnings cycle, everything is going to lead to Nvidia. Nvidia has a market maker move on a day where AMD and Google Alphabet are coming out with earnings. That's how important it is because Google Alphabet, and think about Nvidia, AMD, Google Alphabet, Microsoft, Meta Platforms, Apple, Amazon, all coming out with earnings this week. All are going to talk about CapEx spending. All are the major customers of Nvidia. So Nvidia is going to move off of these earnings reports. Here's the interesting thing about large cap tech going into this earnings season, and Nvidia in particular. If you look at the date on the calendar of June 20th, scroll back to June 20th. The high of the day in Nvidia was $140.76 on June 20th. Look where it's trading right now. June 20th to now, the stock is basically unchanged. So that is consolidation. You can correct via price and you can correct via time. And that's what Nvidia has done. So with all the news starting to hit the tape on Nvidia and how everything will feed into Nvidia, the paper money trade we looked at here was this. By the November 15th, so 2 weeks out, the 145 call and sell this week's 145 call. That's trading. It was trading around 275. It's trading about a dime higher than that now. I have it here for 275. It's rallied about a dime. Now, you can work your order on that. You can put in a limit bid, but 275. Now, does that seem a little pricey? Yes, it does. But think about this. You've got an opportunity here to extend duration on this trade and roll into next week as well. It's well inside the expected move for not only this week, but 2 weeks out. But this is one that has Nvidia breaking through where it currently is and going towards the 145 strike either this week or next week if you extend duration. So buying the November 15th 145 call, selling this week's 145 call, trading about 285. Now we've got it in for 275. So this is one, if there's good news from all the names that I just mentioned, Nvidia could start to break through that 140 level and move towards 145. The risk on this trade is the debit paid. The risk on the Meta Platforms trade is the difference between the width of the strikes, $10, and the credit taken in. So whatever credit you get for a short put vertical, the risk is the difference between the strikes and the credit. In this case, in the calendar spread that we're doing here, the risk is whatever debit you pay for it. And like I said, it's over 2 weeks. It's all the way out till November 15th, 2.5 weeks, actually. So there are the trades for today. We've got our macro minute. We've got a paper money trade in Meta Platforms for tomorrow's earnings event. And we've got a paper money trade in Nvidia for every day, as all trades, all events will lead to movement in Nvidia. That's our show for today. That's Daily Trader with Kevin Hincks. Have a great day, everyone. We'll see you tomorrow with another edition of Daily Trader.